Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday. No, it's Tuesday, July the 24th, the year 2018. Let's talk trading. More of the same. That's right. More money and risk management every day, each and every trade, each and every trade. Take a quick look here at the monthly on the dollar yen. It's jumped back over the previous month's high there. We're up 32 pips. If you look at the daily, you can see here we're still out of the wick zone. I'm not sorry, daily, weekly. Wow, I'm messing up here. Oh, we can see though that we've got less gaps still available. We finally filled that yen. And you can see here so far today has been an inside bar. It'll be interesting what happens with that. And only 2 over 100 things have died down. Dropping down into the hourly, looking at the buy zone, there was a trigger for profit there, trigger for profit there. That was a scratch or a loss, depending on what you did right there. Once again, here we have a winner, because right there you see, actually right here you see it didn't get down to this one. So you look here, came back, so there was profit to be had right there, and that would have been good for about 5 pips or so. And if you held on here, there was more. And so you can see here, it looks like we're getting ready to enter back into the sell zone. Rat traders right there, nice reversal off the bottom, 116 into the red rat zone. You see it came out, so right there, that should have been a nice 15 pip profit or more, depending on where you entered the rat trade. And fading the pivot paid off. You see where the weekly pivot is right here. And there's the monthly pivot right there. And you can see we took out that pivot. Yesterday's still open, missed it by 30. We still have this miss right here. So once again, do we take out this one or this one? Which one gets taken out? And an oldie but goodie, doing it over and over because it works. One ball at the top, red candle at the line, you go short. 2 ball at the bottom, green candle at the line, you go long. 1 ball at the top, looking to go short. Very, very, very simple. Too simple, right? I mean, it's just more of the same. But that's what good trading is. It's just more of the same. You know, I think I know why I put these out here. So we can see the different days. There's period separators kind of getting in the way there. But I guess it's not too bad. So we started the day there. Still in the day. Previous day's 5 lines. Once again, more of the same. Green at the line, you go long. Red at the line, you go short. Green at the line, you go long. Red at the line, you go short. Green at the line, you go long. See, if you were unfortunate and got that one, you would have experienced some drawdown. And when you saw it come back here, right there, top of that candle, back into that wick zone, well, you just have to scratch that trade. About a 5 or 6 pip loss. You know, it just happens. Can't expect it. every trade to be a winner. Just doesn't work out like that. Just doesn't. And you can see here the wick zone, not much distance in here, but price still wiggling out of those wick zones. And the holo setup, look at that. It came back in, dipped in. If you were fortunate enough to get that, you'd be up about 27 pips right now. Yeah, I know. Somebody's going to say, oh, Harry hindsight. Oh, but we do it every day. It's just more of the same. How can you call that Harry hindsight? Every day, more of the same. And you can see here, if we look down at the tick level, all the activity. Some people will call this noise, but then if you take a little bit of noise and a little bit more noise and a little bit more noise, and somehow that's not noise, I don't think so. This is the actual true, what's going on in the moment. And you can see here we had this cross. The bid crossed above the valley of the ask. And right now it's setting up, oh what, not even a full pip. As you can see here, just not much action these past few ticks, few minutes. I mean, really, you can look. You can look at the time difference between the ticks. Yeah, that almost gives me an idea. Maybe I should put add another column, seconds between ticks. I don't know, it might be too much information. But you have to wonder, why was there 10 minutes between those ticks right there? What were they waiting for? And looking at inventory reduction bars, there was a long trigger. Here's a short trigger right here, triggered, pulled back. So you're still in that trade. Unless, of course, you say, wait a minute, but that wick is so close. I don't know if I think I'd still be in that trade. I might say, well, if it comes out of the up, if it goes back into this previous candle's body, now I might think of taking the exit there, scratching that trade. So as you can see, slightly combining methods. You can use the wicks as an entry, or you can use the wicks as an exit to tell you it's price action, seeing what price is doing. And daily, weekly, monthly, open, high, and low. Once again, more horizontal lines, more of the same, more of the same, more of the same. Bear at the line, bull at the line. And it's just that simple. And we look at the Einstein line. So from when I brought up this chart, you can see here we had a break, could have taken it. That would have been worth about 10 pips or so. Once again, we had a break. That break would have been worth about 10 pips or so. And you see, once again, simply from when I brought up this chart, price broke out of that, came back down, broke out of that, came back up, and you can see the rest. So you don't really need anything complicated. It's simple. It's just more of the same. I mean, we see this happening every day. Sometimes you win, sometimes you lose. No guarantees. But, I mean, the line, you see, it's below here, so price is going which way? It came up, came down. So right now you'd be up a couple of pips had you jumped in right here. And you just sit there and you just watch it. I mean, some people say, oh, you just get whipsawed because if you bought here, blah, blah, blah. If you sold here, you just get whipped. Well, if you sold here, it came up and it did this, and then it's coming back right here, you scratch the trade. Okay? Now, if you sold here and it did this, okay, you take a loss. And you come back here. Oh, it's just. But the thing is, what about here where you made profit? So, you that's the thing about trading. You don't know what's going to happen. Because if you did, you'd own the market. There would be no trading. You would own everything. So what you do is you have a system or a trigger or something that tells you when to buy, when to sell. Or you have a method. Maybe you have it written down on a 3x5 card or a post-it note. Or you use the My Notes indicator and it tells you, okay, what to do. Or you have an indicator that, makes noise, sounds the bell, rings the buzzer, makes the cash register sound. I have that wave file. I used to put that on the M Shiner indicator, I think it was. And I had it on another one too, just cha-ching. But the point is, you just do it and you employ your money and risk management. And if the market smiles upon you, you can take profit. And if it doesn't, your stop loss is triggered and you wait for the next trading opportunity. But you don't get mad, you don't get happy, you don't get sad, you just trade. And when you're done for the day, you're done. That's it. Go on with the rest of your life. So, it's just more of the same. So we can sit here and watch this, but unless you actually get in there and start trading and see what happens, you're never going to learn how to trade. You have to trade to learn how to trade. It's watching, it's waiting. That's what trading is. And we watch and we wait. And you have to admit it is kind of funny. But you see here, we can look at the minute chart, or we can look at the monthly chart. It's just all price action. The price is the same on all the charts. I mean, you can, look at the 4-hour chart or a 1-hour chart, a 15-minute chart. I mean, it doesn't really matter because it's not what you trade. It's how you trade it. So let us go back to draining the banks.